It's 4 o'clock and it's Friday, August 23rd. Let's get right into it because today was another day where a presidential tweet tanked the market, and it wasn't the Fed because everybody knew that what Powell was going to say. He was going to reiterate what he said in his last press conference. That's exactly what he said. But it was Trump's response, China's tariffs, and then Trump's stupid tweet ordering companies out of China, which of course he can't do. So let's look for things on the bright side, because I believe this is an overselling, and I believe the market will bounce back on Monday if Trump keeps his mouth quiet all weekend long. And that's a big if. So decliners led advancers by 4-1. There was blood on the streets everywhere. I'm going to show you something else in a second, but let's just take a look at the market breadth. Market breadth churning is going to be well down below the zero line again. So we are repeating this little event here, except this one started from here, this one started from much lower. So let's look for other instances. How about this one? Came up and then back down again. Up, could be coming back down again. Here's something to take a look at. The advancers and decliners in the NYSE were 10-1, and in the NASDAQ were 7-1, decliners to advancers. That's pretty serious stuff. And if you look at the volatility of the trading ES futures going back for the last 2 weeks, we haven't budged. We haven't budged in 2 weeks. We've stayed right within this highs and lows, but we're making higher lows. That's a good sign. So now let's go to our regular charts. Here's something really important, and I tweeted this out around 3:30 when the market hit the 200 EMA and got support and also closed that gap. So we closed 2 gaps today, this one and this one, which was only from Thursday of last week. Bang. 2 gaps gone. Any more below us? No. We'd have to go back quite a ways to find other gaps. And if you look here, you don't. Here's a very tiny, no, that's not even a tiny one. You don't see any. So gaps gone, that's a good sign. The 200 acted as support. We came back to close at the 200 EMA, that's support. We're still within, we're out of the cloud, but we're still within this range of volatility. And if we get back into the cloud, we're going to resume flying blind, flying in a cloud. At some point today, we did get support for the Ichimoku span on the 200, right about this level today. We went a little bit further down, but 3 things were in our favor. The 200, this inverse head and shoulder neckline, which goes way back, but we've shown it many times in the video, so I won't show it again, but that is the trend line, the neckline, and then the Ichimoku span. So 3 things to say that we could have a technical bounce on Monday. Caterpillar got decimated, but is still going down towards the this gap. Apple, super decimated, but the cloud seems to be acting as support. The Ichimoku span did dip below the candles, so that's not a good thing. Apple could be going further down. This is nonsense to think that Apple needs to move out of China just because President Trump said so. Elmer DeWitt posted in Forbes today saying that 5 to 7% of Apple's Chinese production could ever possibly be moved, and it would take 18 months to accomplish that. Not going to happen. We added more gold today. You saw that tweet. And because the market suffered so badly, gold had a really nice bounce and is back into our flat channel above the bull flag. Same thing that happened before. So another bad day or uncertainty or any support from the Fed for a weaker dollar, and gold is going to move up. Whirlpool, disastrous day today. The only good thing I can say is that I was able to roll my 40% of my stock is with 130 short weekly calls. I was able to roll it. Here's the silver lining. The 200 acted as perfect support on the Chiku span, 26 days behind today's price, even though we finished below the 200. Walmart, which I got out of, just continued to drop. I tweeted that I got out of it early this morning for a loss of $250, but it's better than the maximum loss that I could have faced of $700. And it would have been hard to recover that now because so much delta has gone out of that trade that you just need to recognize when it's time to get out. And when you've lost a third of your maximum loss, I've learned to get out. Holding on is only praying, and praying doesn't work in the stock market. The Dow Jones stopped at the 200 simple moving average, but the S&P stopped at its 200 extended, or EMA, expanded moving it. I always forget. EMA. Those are good signs. I think we are going to get a bounce, but stay tuned for news after 4 o'clock from Donald Trump, who said he had more to say on the Chinese tariffs. Saner heads may have told him to wait till after 4 o'clock. I'm not sure there are any saner heads left, and I'm not sure that he listens to them anyways. I'm looking at the ES now. It's bounced for the last 10 minutes. So if Trump was waiting for 4 o'clock, he's still waiting. Who the hell knows? Have a good weekend.